Hey, welcome back. One of my outdoor videos, and it's July 11th. Given what is the future outlook for Bitcoin, analysts foresee a sustained rally through year end, driven by weak US dollar, rising global liquidity, which amounts to a whopping $55 trillion, and growing institutional demand, are now mainstreaming Bitcoin. Tech giants are next. Next on the list, BlackRock's IBIT now holds over 700,000 Bitcoins, which is roughly 55% of all US spot Bitcoin ETFs, with $76 billion under asset management, surpassing its S&P 500 flagship fund. Now, this actually confirms and validates that Bitcoin is an institutional asset, so we should expect continued strategic inflows and potential ETF volume exhaustion. Now, on the topic of ETFs and also publicly registered companies headed by Strategy. Now, Strategy has almost 600,000 Bitcoin. If you take the $76 billion worth of IBIT Bitcoin spot ETF alone, and that's just in the US, there's around over $100 billion of total global assets under management across all of the Bitcoin spot ETF funds out there in the world ever since its inception in January 2024. Now, this is going to exhaust quite rapidly the supply. Currently there's 19.7 million that's been mined, and if you take in consideration 3 to 4 million of which have been lost because of people have been reckless or they've actually been drained their wallets, we're talking about 15.7 million Bitcoins left in circulation. So it's going to exacerbate, as I said before, the supply shock as a result of this humongous demand for Bitcoin as we're seeing. So the message here is this is really the only window of opportunities that we have left, particularly for the retailers, because as I said before in many of my videos in my channel, which is all the more reason why you'll subscribe, is this is a rather unique asset class in that it's been born by the people, for the people, rather than just seen to be an institutional asset. Don't leave this window of opportunity to pass by, because you will regret it later, particularly if you think about your next of kin. Now, the next on the list is RWA explosion. We have seen a huge uptake of real assets tokenization across the spectrum. So the market has actually surged by roughly 800%. Now $65 billion worth of institutional flows coming in to the market. Now, there's an interesting exchange in Brazil, which is the largest of crypto exchanges in the region, called Mercado Bitcoin, plans to tokenize roughly $200 million in real-world assets on XRP Ledger, demonstrating live TradeFi to crypto bridges. Now, I have talked about what is XRP and why, for me, it's one of the 4 pre-vetted or endorsed digital assets ever since President Trump have actually signed the executive order placing the 4 digital assets in its US strategic reserve. It's Bitcoin, Ethereum, Solana, and XRP. So it's not a surprise that we are seeing more mainstream adoption of XRP, because what the US signs is a done deal for the rest of the nations and sovereigns and the corporations and the fintech players to start embedding XRP into its business. And this leaves a window of opportunity, as I said earlier, for us retail investors to start perhaps doing that research on the appeal of XRP. If I sum up what is XRP, is more like the financial plumbing infrastructure as that bridging asset that brings all of the fiat wealth onto the blockchain. So there's no doubt at all that what President Trump has signed in that executive order to include XRP in its strategic reserve makes total sense. Are we going to be seeing a lot more increased activity and adoption for each one of these 4 strategic reserve assets? And I wouldn't be at all surprised that other nations will just have to play catch up. So we should expect to see more TradeFi to crypto bridges headed by XRP Ledger. So we need to watch this space. I also want to touch on blockchain technology space, because again, there's been some recent developments there which I need to bring to your attention. China's scientists have recently unveiled a quantum-resistant blockchain technology, paving the way for future-proof protocols. Now, if we just kind of break this down as to what that breakthrough invention is, it's to do with this efficient quantum-resistant authentication storage, in other words, EKAS. Now, EKAS replaces vulnerable math-based encryption with Sphinx, which is a hash-based signature scheme that's inherently resistant to quantum attacks. This actually ensures long-term blockchain integrity beyond today's cryptographic standards. Its dynamic tree and supertree architecture separates data from validation, improving scalability and cutting verification times by over 75% versus Ethereum, positioning EKAS as that pioneering model for next-gen secure blockchain infrastructure. Now, I have made a couple of videos on the topic of quantum threat on Bitcoin, and I have explained in each of those two videos why at that moment in time it wasn't perceived by the Bitcoin developer community as an imminent threat to the Bitcoin network security. So given that we are seeing more powerful supercomputers to break the traditional cryptographic functions, the cryptographic methods, we are starting to see some rather innovative solutions or methods to actually make the blockchain networks more quantum resistant to its attacks. And this is what these Chinese scientists have actually unveiled. And I know for sure that the Bitcoin developer community are actually looking for other similar solutions. So we're going to be seeing more methods, more creativity and innovation on these rather efficient quantum resistant authentication methods, which I think is going to really replace the standard SHA-256 cryptographic method that's currently been adopted in the Bitcoin network. So we should watch this space, and we should treat this as a sign of optimism that there are experts working under the covers day and night to actually find that quantum resistant cryptographic means in order to secure particularly the leading Bitcoin global monetary network, which currently has over $2 trillion worth of TVL, total value locked in its ecosystem, and it's set to grow. So this is going to be rather important, and I will definitely keep a close eye on this development. And if there's any further revelation, you will soon see some episodes in my channel that would actually share you that news. And then the last important news that I'm seeing, it says here that the European Central Bank is testing blockchain payments, signaling central banks' preparedness to modernize monetary rails. Now, this is actually, again, good news, because if you recall, and I made a couple of videos on the topic of ECB particularly, not so much the case with the Fed, because they've downfounded the CBDCs, the Central Bank Digital Currencies initiative, because it was such unpopular for its electorate. So that is done and dusted in the States. And what we are seeing that the ECB has attempted to pilot, they're still piloting the Euro CBDC currency, which I think is not going to go any further, because we are seeing stablecoins taking over with the failure attempts from central banks in piloting their CBDCs. There's only, I think, 3, 4 or 5 countries out of 200 countries out there on the planet who have officially legalized and rolled out their CBDC currencies in their jurisdictions. The rest, they either have paused or pulled out from that initiative. So that is a good sign, because stablecoins are indeed the right way, the definitive digital payment rail system that will bring in the capital wealth from fiat onto the blockchain in order to provide those desperately wanted benefits for users to be able to conduct, let's say, cross-borderless payments at a fraction of a second, at a fraction of a cost, in real-time settlement on chain, which ultimately is the benefits that stablecoins provide over CBDCs. And there's one caveat I have to confess to that. Both CBDCs and stablecoins, what is the key difference? CBDCs are issued directly by the central banks. So it's like digitizing their fiat currency under the strict control and issuance by those central banks, which is different from stablecoins in that the private issuing firms issue the, let's say, tether, but the underlying backing of the US dollar. And who controls and issues the US dollar? It's the Fed, the central bank in the United States. So what I'm trying to say is, regardless of CBDCs and stablecoins, they're still faced with the same underlying counterparty risk, and under no circumstances to treat stablecoins or CBDCs as a store of value. Please treat it only as a medium of exchange, just to cover those day-to-day expenses, but please Don't use it as a store of value. For that, ultimately, for me, is Bitcoin as that leading digital commodity, store of value asset, and maybe select 2 or 3 top emerging real world assets tokenization that has been vetted by and endorsed by leading nations in capital markets. You got XRP, I think that's one of those, should be on your list to do your research, and perhaps Solana, and maybe one other, right? There's plenty. The point there is you can treat those as more speculative asset in the short to medium term, and Bitcoin as that leading digital commodity in order to preserve and grow your capital wealth in the long run, right? So that's Bitcoin, and stablecoins to use them as a medium of exchange to cover those day-to-day expenses that you may have. So that's all I have for you today. My message, as always, still remains the same. Invest wisely and invest in Bitcoin. Until next time.